Well, happy Monday, March 13th. It is spring break here in Austin. Wanted to bring you guys up to speed on the latest statistics here in the market. So I'm going to start here. This is a graphic I've shared before. It's the number of active versus sold listings. Green are the number of active listings we have on the market right now. The blue are the number of contracts that closed that month. It's still mid-March, so this number should climb a lot, the blue line, but we're finally starting to see the number of listings slowly build up. It's a little later than we've seen in years past. Normally, we would have seen this climb already in February, but in January, we probably had 8,700 homes for sale. But in February, it went down to I think somewhere around 8,300, and then in March we're back up to 85. So we're still below January. But it is finally just ever so slightly starting to climb a little bit. We're sitting about 4 months of inventory. So at least for now, we're kind of seeing the sellers come out, but not in the big numbers that we've seen in years past. The big news over the last week, if you were paying attention, was mortgage rates. So last week, mortgage rates were going up, 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 up. But what happened on Friday? Friday was a really interesting day for those paying attention. There was a major bank called Silicon Valley Bank that collapsed out in California, literally went under. That bank is a very important bank because it has a lot of big clients, venture capital firms, Opendoor, Airbnb, a lot of different companies have their funds with this bank. And just because of the way they were managing their reserves, their investments into bonds, there was a run on the bank, which means people were running in there to get their money out, and they didn't have enough coming on inflows to cover the amount that people were pulling out. They couldn't cover everybody's funds that they were trying to take out. And so they went under. The FDIC's taken over. That scare made people rush back into bonds, and the interest rate has come down about a quarter point. So right now we're sitting about 6.76. Last Thursday, it was somewhere around 7%. So if I scroll down and look at this chart, this kind of shows the volatility of the mortgage rates. You know, we were down at like 5.9 starting February 1st, and then it went crazy and it went up to 7.1 on the 30-year fixed. And even last Wednesday, we were at 7, and now we're down at 6.76. You can see right at the end of this chart over here, you see that little drop off right there. And so how long is that going to last? I don't know. Is that banking shock going to keep rates between 6 and 7? I think if you see here on this chart, here's 7, here's 6. And if they can stay in this range right here in between 6 and 7, I think the year is going to be okay. I think what we were getting nervous about, and we're still nervous about, is if those rates decide to climb back up, go at 7 or above, that's going to put a lot of downward pressure on buyers. As long as they stay somewhere in the 6s, I think this year becomes a little more predictable for both buyers and sellers, and that will keep kind of the energy flowing into the market. So here are some statistics that we got late last week. So this is a look at February over February last year. So we're starting to get some more February data in to tell us how the market is trending. So the top portion here is the whole metro area. We call 5 counties make up the Austin metro area. If we look at all of that, the median sold price at the end of last February was $498,885. It's now $439, and that's about an 11.8% decrease. Now, I've had this conversation every week, I'd say almost every single day. Everybody's like, is Austin going to crash? Is Austin going to crash? My answer is we already did. Okay, so the big fall was from last May to about last October. We're still trickling down a little bit, but the big drop was from last May to last October. Right now, we're comparing in this chart data from this February to last February. What was happening last February? It was skyrocketing up in price. And so we're still looking, if we look back now in a softer market back to a skyrocketing window, of course we're going to be down. And I would expect by the time we get to May and look at this data, it's going to go from negative 11.8 to probably a negative 20, maybe even negative 25. So the big numbers on a year over year basis are going to get worse as we get between now and May. And they'll start to slowly improve depending on what happens in the market this year. but they should start to narrow again as we get back to the end of 2023. However, my prediction is we will stay negative on a year-over-year basis for the rest of this year. I don't think we go positive until 2024 on a year-over-year basis. The reason is I don't think our prices are going to go up. I think we're going to go sideways. It's still or down a little more, but I think we're going to kind of go that way. And so because of that, we're going to stay below 2022 numbers for another full year. But anyways, that's the number there. So most of that drop's already happened. Now, if we look month over month, prices may actually improve. So once we get February and March data, you might see that February numbers actually came in a little better than January, or maybe March comes in a little better than February. So we could actually see the price improve a little bit, but year over year, it's going to be negative and it's going to continue to get more negative. Last year at this time, we had almost just barely half a month of inventory, 0.6, which means everything was selling like crazy. Now we have about 4 months of inventory, a very healthy market. Look at that difference, 573% more homes on the market, more inventory. So if you are a buyer, hello, you've got a lot more to choose from than you had a year ago, and the price is better. So quite honestly, it's a great time to be a buyer as long as you can make the interest rates work for you. If we look down here at City of Austin, same story. We couldn't even run months of inventory. It was selling so fast. Now we're again about 4%. The median price in the city is about 120 grand higher. So last year it was 588. Now it's about 557. It hasn't dropped as much year over year. One of the main reasons is the city of Austin doesn't have as much new construction, number one, and it's the core of the market. When markets soften and it gets more affordable, it makes it easier for people to move back into the core. They don't have to live on the far outskirts of the market. They can slowly kind of work their way back in. And so it helps preserve sometimes the core of the market, at least in a traditional city. Something like San Francisco, New York, those will be different. But, for a regular city where it gets easier to come in, buy a single family home in the city, prices get better. It does help preserve the price a little bit. So you can see it's negative 11.8 for the whole metro, but only a negative 5 in Austin. So anyways, that's looking there. And then finally, I was going to come back and look at the front page of the MLS again, just to give you a seven-day view. So we've had another 900 homes come on the market, but look at that price reduction, still high, over 1,000 homes drop their price. Here's what we're seeing in the market right now. If you are well priced, marketed well, staged, your house is in good shape, if it is in the right spot, don't be surprised. Those homes can sell the first weekend or maybe the second weekend. A number of homes right now are back to getting a couple offers, multiple offers. Okay. There are plenty of other homes that aren't getting that activity. They've been on the market for a month or 2 months. They don't have that first week energy anymore. And if you miss that first week, showings tend to go down precipitously after the first couple weeks. And so then you're down to 1 or 2 showings a week. You just don't have enough energy to get your house moving. You have to adjust the price. So we're still seeing on a weekly basis, 10 to 15% of homes in the market every week are lowering their price on the market. About 148 came back on the market. That's about what we're seeing. Maybe 1 out of every 10 contracts might be coming back on the market. We're still trending somewhere around 800 homes a week going under contract. In terms of closed sales, we had 549. If you take that pace times 4 weeks, you're probably looking at maybe 2,500 homes might close in the month of March. That's kind of the number we're looking for, maybe 2,500 homes in the month of March. Now expireds, holds, and withdrawals are starting to drop off. So there aren't as many sellers taking their homes off the market. Why? Because more things are starting to sell. So we're watching the inventory. We've just been hovering around this 4-month mark. I expect we're going to see that for the rest of March. And then it'll be interesting to see if we get more and more sellers coming out, or if the demand from buyers is enough to kind of keep the supply months of inventory around 4 months. So that's the main thing we're watching. Right now, it's a busy week in Austin. It's spring break for everybody. We have South by Southwest in town, so we probably have 150,000 additional visitors, all the tech folks. We have music, film festival. So Austin is hopping right now. The weather's amazing. So it's a great time to be in Austin. If you're planning to sell or buy, this is the season. The spring season is when a lot of that activity picks up, and also helps to, as a seller, can help preserve price because now you've got a lot of energy coming into the market. Ideally, if you get your listing right, you can have a good first or second weekend and get the buyer you need, get off the market. So anyways, hope this is helpful. I plan to give you more information each and every week on Mondays. Until then, enjoy your spring break and talk to you soon.